Okay, let's get started. All right, so this session we're going to go over trading at the bell. This was a session that you guys as a group came up with that you wanted to focus on, and so here we are. So we all know that trading at the bell is very volatile, right? That's a very volatile time of the trading session. This is where you'll typically see a lot of the action on a particular stock for the day to take place, right? A lot of traders won't even trade at the bell because they don't like that volatility, so they'll wait the first 15 or 20 minutes until the volatility kind of settles down so that they can identify a trend. Because a lot of times at the bell, when the bell rings, there's not necessarily a trend that's being identified, right? So, like I said, a lot of traders won't even trade the bell. I'm kind of one of those traders. I don't trade the bell very much. I'm not into that volatility, right? But some are. If you're looking for that volatility, then the bell has got your name written all over it, right? So, very volatile. Other traders, that's where they want to focus, right? That's where their main focus is on that time frame. From the time the bell rings to the first 30 minutes or up to an hour after the bell. And then after that, once things kind of settle down, then you can start to identify what the trend is going to be for that particular stock for that day, right? So those are just some pros and cons of trading at the bell. It's very volatile. A lot of times you'll see a stock will rocket up and it'll just dump right back down to where it started, then rocket up again and right back down. It's just a very volatile time. Obviously, there are a lot of things that can affect trading at the bell. If there was news pre-market or there's an upcoming catalyst or it's PDUFA that day or the next day, obviously a lot of things can affect what happens at the bell. So we have to certainly keep that in mind. So I'm going to give you guys a few different strategies that are pretty popular. There are a lot of different bell strategies, but I'm going to focus on a couple of different ones that are pretty popular. The one that I like the best is I like looking at, I don't know what the actual strategy is called. I call it the 5-minute bell high and low, okay? If you Google that, maybe it'll come up with something, maybe it won't. But what you're doing is, we'll take GRVI here as an example. Let me make sure I'm on trend line. I am. Okay, we're looking at a 5-minute chart here. See, right here, 5-minute chart. And what we're looking for is the first 5-minute candle. We want to mark the high and the low. So let's do that real quick. Let's mark the high right here, high 5-minute candle. And let's mark the first 5-minute candle low. Okay, it's going to be right here. And let me move this over a little bit. All right. Okay, so this is our 5-minute high and low. You guys see that here? Let me turn on my handy dandy drawing tool here. All right, so we see this right here is your first 5-minute candle, that green candle right here, right? This one right here. So what we focus on this particular strategy is we focus on the low and the high of the first 5-minute candle. And what we're looking for is, after this 5-minute candle completes, you quickly draw your high and your low, right? And then you're looking for a break of that high or that low, depending on what you're looking for. Keep in mind, these are stocks that you have decided beforehand that you think are going to go up or down at the bell, right? So it could have been a gap up or a gap down from pre-market. It could have had news pre-market, whether it was good news, bad news. You know, maybe yesterday it had bad earnings or whatever the case may be. You have already predetermined which direction you think this stock is going to go, okay? You're not just picking a random stock and saying, okay, I'm going to identify the first 5-minute candle high and low, and wherever it goes, I'm going to take that trade. No, we don't want to do that. You want to have a plan already in place, and we'll go over that a little bit more here shortly. So let's say that on GRVI that your plan was, for whatever reason, that you thought that it was going to see some upside, okay? So you marked the 5-minute high and low, which we did. Right here, here's your 5-minute. So here's your first 5-minute candle right here. This one with this big long wick. So we marked the low and we marked the high. And what you're wanting to do is if your thought on this particular trade was that you thought, for whatever reason, that it was going to see upside after the bell, okay, then you're looking for the break of that 5-minute first candle high, okay? We saw that break right here, right? So you would take the trade here. You would put your stop loss accordingly. Obviously, you want to put it wherever your risk management plan says that you need to put it. Or you can put it just below that, that particular level, okay, at a percentage or a dollar amount, a cent amount. Or if you have enough risk management, you can put it all the way down to where the low is, right? That part, 100% up to you, okay? But just keep in mind, whatever decision you make to put your stop loss, that you make sure that it coincides with your risk management plan. You don't want to go over that, right? Okay, so it broke this pre-market high here, okay, or not pre-market, I'm sorry, 5-minute open candle high here. So you take the trade here, and then you get out wherever it ends up here, okay? Same difference here on the low. Let's say that you thought that this particular stock was going to have downside after the bell, right? So we identified the high here, the low here, low right here on the first 5-minute candle, and we broke that low right here, right? So maybe you maybe decided the day before or pre-market for whatever reasons, okay, that this particular stock was going to see downside after the bell, okay? So once it broke that first 5-minute candle low, you take a short position right here, right? And then you ride this short position all the way down, and get out wherever you want to. So that is basically the first 5-minute candle bell high and low strategy, okay? But once again, you're not just picking a random stock and just identifying the first 5-minute candle high and low and just going long if it breaks it, going short if it breaks below. There needs to be a reason behind that, right? So don't just pick a random ticker. These decisions are made prior to market open. You've already decided, okay, this is what I'm going to look at. I'm going to watch these 2 or 3 or 5 or however many you can watch tickers based on your studying beforehand, right? To just figure out what you think they're going to do based on the information that you have. And you have to decide for yourself, why are you expecting it for it to continue higher, or why are you expecting it for it to continue lower? Did it have news? Is it a pump stock that yesterday was up 125%? So you think today you might, at the bell, you might see some profit taking. Was it today did they announce a closing of an offering, right? So you think you might see some upside. Is there an upcoming catalyst? Do they have data due today or tomorrow? Or is PDUFA today or tomorrow? Or is earnings today or tomorrow? Those type of things that you want to look for. Millions of examples, but basically my point is that you want to have a plan, right? You're not just picking a random stock and going in blind, okay? And when you're taking these trades, you also want to pay attention to key support and resistance areas always, right? You want to take a look at your daily chart key areas for support and resistance. You want to look at your pre-market support and resistance. What was it doing pre-market? Where can you identify that it was consolidating in pre-market, and maybe identify those levels? You want to look at the pre-market low and the pre-market high. You want to look at the prior day's high and the prior trading day's low, right? Take a look at all of those levels and have them drawn on your chart. And what you can do is let's say that we had a pre-market high or a previous day high, whatever you want to say, at this level here. Okay, we're just making up a level here. So what you can do is draw a trend line here. And I don't know about your platform, but Thinkorswim, you can go in here, edit properties. You can change the color. Let's change it to gold. And let's say that this was the previous day high, PDH, okay? Show label on the right-hand side. Click OK. And that didn't work. Hold on here. Not sure why it's not showing the name. Okay, let's switch this. Let's change this to a price level. Hold on. So that we can name it. So we're going to change this to a price level. Let's say that yesterday, your high yesterday, your previous day high was here. Okay. So we'll go in here, edit properties, change the color, let's say to yellow or gold or whatever that is. And that was the previous day high. Okay. Show name on the right. Click OK, and there we are. So we have PDH, previous day high, 851. So those are just levels that you want to have marked on your chart, just in case you might, those are just extra areas that you can key in on where you might see a price direction change, right? And that may be a pre-market high, pre-market low. That may be a previous day high, previous day low. Could be a previous day close. So just make sure that you're paying attention to all of those different areas when you're taking these trades at the bell, okay? All right, so that was one of the examples that I wanted to go over, which, like I said, is kind of my favorite. If I'm trading at the bell, I'm typically looking to trade that 5-minute high-low, okay? First candle 5-minute high-low, whether it's to the downside or to the upside, depending on what I've identified on that particular stock as to what I think it's going to do at the bell, right? Okay, and let me show you a few more examples on this particular trade. So this actually trade, you could have done it both ways, right? So on this GRVI, you could have had a small upside profit here, and you could have had a larger downside profit here, right? As you see that. So you see when it broke the the first 5-minute candle high, it came up here and made another new high of 936. And then once it broke that first 5-minute candle high, it certainly broke down. So that's one example. Let's go over a couple of others. Let me get rid of these so I'm not confused as to why I have those on there when I pull this ticker up next time. Let's look at another example. Let's see here. I looked at a few examples here. Let me find one. So let's look at Sava. Sava has been one that's really given us a lot of opportunities to trade since it's been having those short reports come out on it. So this was on Thursday. This is Friday trading here. So once again, let's identify the first 5-minute candle high, which is right here. Try and get this thing straight. And the first 5-minute candle low, which is right here. All right. Okay, so here's our first 5-minute candle high, first 5-minute candle low. Let me draw that on here so everybody sees very clearly. There's our first 5-minute candle. Apologize for my drawing there. Okay, so once again, if you're with whatever information you gathered, you were looking at this thing pre-market, or maybe you were looking at it the day before, or maybe you were looking at it 2 days before, and you thought to yourself, you know, every time Sava gets down here in these lower $50 areas, I'm noticing that we're seeing upside once the bell rings. Okay, so let's say that was your thought process. Your thought process was that, you know, you think that this thing doesn't deserve to be, you know, in the low $50 area, and every time you've seen it down there, that's been an accumulation area. That's been where you've seen some support come in, where buyers are coming in and buying, you know, buying those prices up, right? So once we saw that pre-market break, right, or not the pre-market, I keep saying pre-market, I apologize. Once we saw that first 5 minute candle high break, what did we have? We had some upside, right? And once you know, if you took the trade right there, right on the money, it never came back down to that level. So you had a pretty comfortable trade until it got up here. Now, would you pay attention to this resistance level here? Absolutely, absolutely. This is why you want to identify those resistance levels so that you can look to where you might want to be taking profits, right? You might want to be scaling out, or you might want to be dumping your entire position if that's your, you know, if that's the way you trade. So you want to pay attention to all of those levels that we discussed previously. You know, support and resistance on the daily chart, where it's, you know, key support and resistance areas, you know, pre-market key areas, you know, prior day close, prior day high, prior day low, all of those areas you want to have drawn on there, so that, you know, when you're trading at the bell, you have key areas to focus in on. Okay, if we're having trouble at this area, maybe you want to scale out a little bit there, right? If we break through that area, maybe you want to add a little bit more to your position. You know, maybe you just took a starter position when it broke that first 5 minute candle high. Maybe you want, you know, maybe you only took 25% of what you're normally willing to, you know, put in that particular trade. So maybe you, when it breaks the next resistance level, maybe you want to add a little bit more to your position, and so on and so on. So this is another good example of a first 5 minute candle high break where you could have seen some profit. Now, what I don't like on this particular one is I don't like taking a trade this far out. Okay, so I'm usually on this type of trade, I'm usually looking at only the first up to an hour. Okay, after an hour, this is just me. You can back test and see if it works for you, but for me, pretty much after the first hour, in my opinion, for me, all bets are off. I'm not really focusing more on that first 5 minute candle high and low. Okay, even though when we did come back and break that first 5 minute candle high area, we did see a lot of downside. I'm not really focusing on that more than 1 hour after the bell. But like I said, you do your own back testing, come up with your own strategy as far as that goes. If you find that works more often than not, then maybe that's something, you know, that you want to focus on. Okay, let's look at another couple of examples here. Let me get rid of these trend lines. All right, let's take a look at BNGO. So BNGO is basically a stock that's in kind of recovery mode. You know, this thing has been trading for whatever reason down in the low 5 area, and it doesn't normally trade in that area. Okay, it did have some piece of news a couple of days ago. I don't remember what it was, but made it pop up a little bit. But basically, you know, with BNGO trading in the low 5s, that's not normal. Okay, it's normally trading, you know, around, you know, 6 level, 6.5, sometimes even $7. So let's say because of that BNGO, you were looking at it and you thought it was just too cheap, right? So you thought that it was going to have upside at the bell. So let's draw here's our first 5 minute candle right here. So let's draw our high here. I can get it straight. There we go. And our first 5-minute low is here. Right? So now we've identified that first 5-minute high, first 5-minute candle high and low. So whenever we broke through this 5-minute low, keep in mind, you've already decided that you think that this stock has upside for the day, not downside. You think that, hey, 530 area is too cheap, or 540 area is too cheap for this stock. You think there's going to be upside for whatever reason, right? So you're not worried about this break of the low because you're looking for upside. So you're watching for this break of the high, which happened right there. And of course, let me get back here. Sorry, guys. So you're looking for this first 5-minute break, or first 5-minute candle high break, okay, which was here. So you're looking for that upside. And you ended up making, you know, whatever you made, wherever you scaled out, went up to 552. And then once again, it broke the first 5-minute candle low way over here, which is, you know, 2 o'clock in the afternoon, which is obviously too late for me anyway. So that's one more example. Let me think I have another example. Let me look. And this is what you guys need to do. Y'all need to go back and look at charts, right? And look at, go ahead and don't look at the future, right? Hide the future from yourself and look at a particular stock. Okay, this stock, I want to look at this one, and this one, you know, I think for whatever reason, fill in the blank, should see upside at the bell, okay, well, for whatever reason that may be, and go and look at what it did. Go and draw. You know, the great thing about these charts is we have all the history we could ever want, right, from taking a look at what's transpired in the past. So let's say you think that whatever stock, you know, had potential upside at the bell or for the day. And so you go and you identify the high and the low of the first 5-minute candle and see what it did, right? You can back test that as much as you like. That's the great thing about having these charts. So there's one example there, and we have a short example here. So we'll identify this as the first 5-minute high. And here we are with the first 5-minute candle low. Right? And we had a short example here. So, you know, for whatever reason, you know, you saw this thing trading, or maybe it had bad news after hours, or whatever the case may be, and you thought there might be some downside at the bell. Well, here you go. So whenever we broke that first 5-minute candle low, look at what happened. I mean, just massive downside, right? So there's an example for BNGO for an upside trade on Thursday and a downside trade on Friday. Okay, let's look at a couple. Well, I think I have one more example. Let me look here. I think I actually have 2 more examples. Examples are good. I like to show you guys different examples. So let's take a look at, what's our next one? HX. So HX has been one that has been trading really well on the upside for, let me show you guys the daily chart on this thing, if I remember correctly. Look at the daily chart on this HX. I mean, it's just insane, right? So we were trading down here, you know, $1.50, $1.60, and this is the daily chart. I mean, it's just vertical on the daily chart. It's just insane. And I know you guys have been hearing this thing hit the scanner. You know, those of y'all that are in voice, you know, this thing's hitting the scanner pretty much every single day. I mean, look at that upside on the daily chart. It's just vertical. Very, very nice upside. Anyway, let's go back to the 5-minute chart. Okay, so let's look at this day here. All right, so let's look at Friday. Make sure we're on our... So let's identify the first candle, 5-minute high, which is right here. And the first 5-minute candle low, which is right here. All All right. So let's say that you decided yesterday, hey, this thing came down. This thing's really been trading hot lately, right? You've looked at the daily chart. You saw that basically the daily chart's a vertical, but you saw it come down here, and yesterday it made this big low down here at 398. So you're thinking, wow, that thing's getting pretty cheap, right? And for whatever reason, you have to come up with your own reasons for these things, right? For whatever reason, you think that this particular ticker has some upside the following day. You know, you think you're going to see some bounce off of this, you know, $4 level area, right? So you want to, so you're looking to go long at the bell, okay? So you're hoping that at the bell that this thing ends up coming and breaking this first candle 5-minute high. And man, when it did, look, wow. I mean, broke that 5-minute high there. Even if you waited for confirmation, which would be on this candle here, right? There's your confirmation break. It actually closed, that candle closed above the first 5-minute candle high. Look at the upside potential, right? So that closed at like what? I don't know, 470, somewhere around there. And you could have had upside all the way to 654, you know. But keep in mind, while you're moving up, maybe right here you had a key, well, it's kind of a bad drawing there. Maybe right here you had key resistance. So you want to take a look at maybe scaling out some profit there if you weren't breaking that resistance. Maybe here you had another resistance level. So you're looking at scaling out all the way up. That way you've got profits booked on the way up. And then oftentimes what will happen is traders will sell all of their shares, and they'll say, man, I sold all of my shares at $5 and it went to $6.54. I can't believe I missed out on all that profit. Well, there's a way to combat that. What I like to do is that I like to take profit on the way up because I'm booking profits, right? I'm putting money in my pocket. It can't be lost at that point. It's already in my pocket. And then what I'll do is on my last area where I'm looking basically to, okay, this was my last price target. What I'll do is I'll leave a lottery play in there. That percentage can be whatever it needs to be for you. For me, it's typically 25%, okay? So if I'm in a position 100%, when I start scaling out, I'll scale out 25%. The next level, I'll scale out another 25. The next level, I'll scale out another 25, which leaves me with 25% left, right? So a lot of times, I'll let that last 25% ride for a lottery play. That way, if the stock does continue on up, yeah, you didn't get the most out of it that you could. You didn't get all the profit, right? But at least you still have some shares in there for continued upside. But you did the smart thing and you took profits off the table. You put them in your pocket, okay? So I like to do it that way. You certainly trade your plan, but that's the way I like to do it. So I wanted to point that out to you guys. But this would have been a really nice, a great example of if you thought this particular stock had some upside today because of this low down here the day before, then this would have been a really nice trade for you. So let me get rid of these drawings here, and we'll go and look at our last example. Last example I have is JSPR. Hold on here, I'm not able to, why is that? JSPR. Let me switch this. I don't know why Thinkorswim's being a little tricky with me here. Okay, well, for whatever reason, I'm not able to pull that up. Not sure what's going on there. Hold on, guys, 1 minute here. I can fix this. There we go. Sometimes Thinkorswim's a little bit finicky. Okay, so let's look at JSPR. So let's identify real quick our first 5-minute candle, high and low. Okay, so we have it right here. First 5-minute candle high. First 5-minute candle low is already drawn on there. I must have had that as a, oh, I know why I had that. I had that because a couple of days ago it was having difficulty breaking that 1650 level. Well, it obviously met, it had support at that same area right there. But anyway, we'll change this, remove it, and we'll draw another one. Coincidental that was holding support at that same area. Okay, so there's our first 5-minute candle high and 5-minute candle low. Let's say that you thought that this particular ticker had some downside because it ran so hard right before the bell rang, right? Why did this happen? So you're thinking to yourself, wow. So this would have been one of those ones that would have been a pretty fast reaction on your part. You know, maybe you weren't looking at it to even trade it at the bell, but you saw that this happened right before the bell rang. This was 15 minutes before the bell rang. We saw this huge upside. So you're thinking, whoa, there was no news. This thing did have news, but it was several days ago. So you're thinking, okay, wait a minute. So this doesn't have any recent news. Why did it pop up so high right before the bell rang? So maybe you thought, hey, because there wasn't any fresh news on this thing, I think this might have some downside at the bell. Because it popped up so much here, you might see some profit taking, right? So, and that's exactly what happened. So if we took so here's our 5-minute first candle low right there. And if we took that trade, even if we waited for confirmation, if we waited until this candle closed, right, this 5-minute candle closed, this came back up and it met resistance at that level, again, at that 5-minute low level, and came right on back down. So this would have been a nice short opportunity, right? So those are some examples that you guys can take a look at. You absolutely want to, before you start trading that particular strategy, you want to start taking a look at, back test it on your own, of course. Take a look at different examples, different charts. Very easy to do. Okay, some other things, we're going to steer away from that first 5-minute candle high and low strategy now. We're going to talk about a couple of other things to look at. So another thing to look at to trade at the bell is look for, you want to pay attention to gap ups or gap downs, right? So what does that mean? When people say, well, I'm a gap trader, well, what does that mean? Well, what it means is the daily chart is not going to show pre-market and after hours activity, right? So if you had a particular stock that did this, right, in pre-market, well, you're not going to see that on the daily chart. On the daily chart, you're going to see that it closed down here. Boy, that's terrible drawing. I'm sorry, guys. I'm drawing on a trackpad. You're going to see it closed, that basically it closed down here the day before, right? And then when it opened up way up here. So you have this huge gap that needs to be filled, right? Doesn't always get filled, but that's what we're looking for. We're looking for that gap to be filled, okay? So we're looking for this downside to come back down here and fill this gap, okay? This gap, which would be right here. And we'll take a look here in a second at the daily chart, and I'll show you exactly what I mean. So we're looking for that gap to be filled. It hasn't been filled, or didn't get filled on Friday anyway, right? Because we didn't have price action come all the way back down, to this level down here. Okay, so let's take a look at the daily chart, and I'll show you what I mean there. So let's go back here 1 second to the 2-day 5 minutes, and we've popped up from 1250 and opened at 1564. Okay. Friday. So anyway, that's what you're looking for. You're looking for these gaps. Okay, see this gap here? All right, this gap here, a little bit of a gap there. So you're looking for those gaps on the daily chart, okay, to go back and fill on any particular day. They don't always fill the gap, but that's what you're looking for when you're looking for to trade, basically gap trading, right, when the bell rings. So when you're gap trading, whether it's up or down, you want to obviously, if it's up, that just means that it opened higher than the previous day's close, right? And on gap downs, that means that it opened lower than the previous day's close, right? So we're looking for at least a 5% gap up or down. Okay, if it's less than 5%, it's really not that big of a deal. So I like to focus on at least 5%. Obviously, the more you have, the better, right? But you want to focus on at least 5%, and you want to take a look at your pre-market volume, right? What was going on with it pre-market? Was there a lot of volume, or was it just slow? You want to look at your average daily volume as well. You want to be on watch basically for that particular stock to possibly fill that gap after the open. So let's say we had a pump stock. There was one. It's a stock that Wall Street Bets is on, and several of these big Twitter guys, they're on it. So it's not really running on any news. It's just running on, basically, it's being pumped, right? So those are ones that you want to pay a special attention to, because since they're not running on anything, those might be the ones that will come back down and fill those gaps. So pay attention to that. Obviously, on anything that you're trading, you're wanting to pay attention to key support and resistance areas, pre-market support and resistance, pre-market low and high, prior day's high, prior day low, prior day close. All of those levels can possibly play a role in what happens at the bell. So make sure that you have those drawn on your chart. So at least it's another area that you can focus on where you might see a price direction change, right? And again, no matter what you're trading, I don't care if you're trading at the bell or if you're breakout trading, if you're trading, breakout of VWAP, or if you're trading, breakout of support resistance levels, or if you're shorting below support levels, no matter what you're doing, you want to have a plan. Don't go in blind. So I already know, okay, so here's my pre-market low, here's my pre-market high. Already know beforehand what your entry price is going to be. So let's say that the pre-market high was right here at 1841. Okay, let's draw this again here. And the pre-market, the first five, I said pre-market, I apologize. The first 5 minute candle high was at 1841. The first 5 minute candle low was this 1662. Okay, so I already have a plan in place that says, okay, if this thing breaks, since the pre-market or the first 5 minute candle low was 1662, I'm going to take a trade at 1650 or 1660, whatever that number is for you. Okay, already have a plan, because it's much easier to follow that plan than it is to try and make decisions on the fly. Okay, because when you're making decisions on the fly, sometimes they can be skewed, right? Whereas if you already have a predetermined plan, you know exactly what you're going to do, and you just follow that plan, and it's much, much easier, and there's less emotion in the trade because you're not making it on the fly. You've already made that decision earlier, right? So always have an entry price. And if you have to write it down, that's fine. Or write it all down. There's nothing wrong with that at all. So what's your entry price going to be? If you're scaling in, if you're not 100%, thinking that this is going to do what you're hoping it's going to do, then maybe you scaled in, right? So if it was a scale, if you did scale in, well, where is your second scale in going to be? Where are you going to add more shares, right? Is it going to be when it breaks the next resistance level, or if it breaks below the next support level if you're going short? Where's your third scale in? Where's your fourth? And so on and so on. Have those predetermined areas already in your mind or written down on a piece of paper so that you can act accordingly. You're not trading on the fly. Have a plan. Where will your stop loss be, right? if you do enter at 1850 or 1650 on a break of this first 5-minute candle low, where's your stop loss going to be? Is it going to be above, just above that 1662 level, or are you going to put it at 1675? Have those already predetermined. Where are your profit targets going to be, right? Have those predetermined. Okay, well, if it, I'm taking the trade at 1650 short, so once it gets to 1630, then I'm going to scale out 25%. If it gets to, maybe there was a support level there that it broke through, so I'm going to scale some profit out. Whatever. Just have those predetermined levels so that you're following your plan. It will make your trade much easier. It'll make it much less emotional, less nerve-wracking, whole 9 yards, right? Just make sure that you have everything in place before you are taking the trade. Are those levels, your profit targets, are they at key resistance levels, or is it just a set percentage? I'm taking a trade. Once I'm up 3%, I'm taking some profit. Then once I'm up 5%, I'm taking some more profit. Then once I'm up 10%, I'm taking some more, right? And then I'm going to leave the rest for a lottery play. Have that predetermined and written down if you can't remember it, right? Or maybe it's a fixed dollar amount. Maybe you say, well, hey, as soon as I'm up 50 cents on the trade, then I'm going to scale out. Another 50 cents, I'm going to scale out some more. Just have those levels in your head or written down beforehand, because it makes your trade much easier. And you've had plenty of time to think about it. You're not doing this on the fly, right? Because when you're doing things on the fly, that's when you will enter into emotional trading, which is never a good idea, right? So like we talked about before, if you're worried about leaving or exiting your trade too early, I see that all the time. Oh man, and I do it myself, right? I'll say, man, I was in such and such trade and I got all the way out at $15 and it ran to 19.27. So I end up, kind of getting down on myself. But don't do that. If you're worried about exiting the trade too early or leaving money on the table, there's nothing wrong with leaving a lottery play, like we talked about before, for more possible upside, but at least you scaled out some profit, along the way. I'm sure those of you that have been trading with me for a while, you already know a lot of my little mottos that I like to stick by. And one of them is, it's never, ever, ever a bad time to take profit, ever. Because if you're taking profit, you're beating the market, and that's a very difficult thing to do. So it's never a bad time to take profit. So if you end up making, let's say, $500 on a trade, and you could have made $1,500, well, hey, that's okay. What I would do in that particular instance is I would go back and look at, okay, let's look at this trade. Is there any indication that I should have stayed in longer, right? And then that's when you start analyzing the trade, and then maybe you can identify something that, whereas next time you might stay in the trade longer. Maybe you made a mistake somewhere, right? But if you made profit on the trade, I wouldn't beat yourself up about it, because that's not always an easy thing to do. So that's all I have, guys. I'm going to open it up for some questions now. I'm going to stop this recording here